not going to be able to go to the bank and say, well, could you fix that? We're going to have to adjust our books and reduce it for the fact that there was a check that didn't have sufficient funds that was deposited. So our number here then is going to have to go down on our side. And again, in real life, we'll just make the entry to fix it. But let's take a look at it now. We're going to say that this is going to be reduced by the not sufficient fund check for 762.5. That's the amount of the non-sufficient funds. Then we also had the bank issued a $17.50 fee for processing it. Okay, the second debit memorandum is $99 charge for check printing. So we printed checks and they gave us checks, so therefore they're billing us for the checks. So we haven't yet written the bill because we didn't know the bill was there. They didn't send us an invoice. They just took it out of our checking account, obviously. So now we have a reduction, another decrease on our books side for printing fee charged by the bank of $99. So now I'm going to make this large and go over here. And again, most of the time what we're going to do is we're just going to fix it now. Now we're just going to go back and we're going to say, well, that's our account. This is where we're at this point in time. And we had this check. So we got to make that amount go down because of this not sufficient fund. That has a debit balance. We need to make it go down by doing the opposite thing to it, which in this case is a credit. So I'm going to copy that. Going to skip a couple lines because I want the debit on top. Going to paste it 1, 2, 3. Going to say that we need a credit of a negative 762.5, which is that number there. We're going to have to debit something, therefore. What will the debit go to? Well, what happened? One of our customers' checks bounced. And so we're going to go to the customer and say, hey, you owe us the amount of the invoice again, plus the amount of the late fee, and see if we can collect on that. So we'll try to collect it. If we can't, then we'll write it off later. So we have a receivable here. That's what people owe us. We're going to say that people owe us more money now. So we're going to obviously send out another invoice on that. That's a debit. We're going to make it go up by doing the same thing to it, which is another debit. I'm going to copy that, going to paste it 1, 2, 3 here. Then if we post that then in N6, we'll say equals and go to the 762. This 30 will go up in the debit direction, puts us out of balance. We will then go to cash. There's something in it. So I'm going to double click on it, go to the end of it, plus, and go to the cash there. That'll make this balance go down. We also know that it needs to go down by that 99 because we paid for the checks, basically. So the cash is there. We need to make it go down by 99. That's a debit. We're going to do the opposite thing to it to make it go down. Therefore, we will credit it. Going to skip a line. Going to skip another line to put it on the bottom. Pasting it 1, 2, 3. It's going to be a credit with a negative 99. That means that we're going to have to debit something. I'm going to put the debit on top for a positive 99. Then what is the amount going to go to? Now we might call it bank charges, bank fees. Many companies will have that. Mainly the bank fees are pretty small though, so we might just put it into miscellaneous, which is what this problem is doing. So if we look at our chart of accounts, we don't see bank fees. We're going to say, nah, it's miscellaneous. Why are we going to put it into miscellaneous? Because it's small and we don't think it's something that will affect our decision making. Therefore, we're not going to break it out. Note that that's one of the major things that bookkeepers are going to do is decide how much detail you want in the books. And you can be on too much of an extreme in either direction. For example, I mean, the biggest extreme we could have is just for someone to group everything in miscellaneous and just say everything's just an expense and not have any type of variation. On the other extreme, we could have, I've seen clients that are put so much detail that they have accounts that just have like $75 in it. So this is parking fee thing. This is a insurance for this, that, and the other thing. And you could have way too many expense accounts. So that's one of the things that the bookkeeper really keeps an eye on and has to customize and decide what is appropriate. So I'm going to go ahead and post that. I'm going to put my cursor in N14 equals. Going to go to this debit. That's going to put us out of balance. It's going to make net income go down like so. So net income went down. And then we're going to go to cash. Going to double click on cash. Going to go to the end of it plus, point to the cash there and enter. Makes cash go down. Now this balance, and note it does not match this balance because I brought it down and this number is summing this up. So I need to make these negatives. So I'm going to double click in here and make that negative. I'm going to double click in here and make that negative. So these are deductions. Now we've got this number matches this number and we're at the end of the day, we're trying to get it to match this number. I'm going to left click, going to drag this to the left and go to the next one. E then says a credit memorandum indicates that the bank collected $19,000 cash on a note receivable for the company, deducted a $20 collection fee, and credited the balance to the company's cash account. So again, we looked at our bank statement and we said, hey, there's an amount in there that is a debit for, increase in our account for $18,980, and we're going to say, hey, I don't see that amount on our book. That's great that I see an amount on the bank statement for 18,000, almost 19,000. That's not on our records. What's it for? And we looked at it, and we had a note payable that was due that was automatically put into our bank account, and that's where it came from. So if we look at our books, then that means our books are off. We're going to increase our books by that amount from the note. So we're going to go over here into the addition on our book side, and we're going to say that we have proceeds of note. And so the proceeds that we got, I'm going to say we received this 19,000 was the note minus the $20 fee that was issued on the note. So we have this adjustment there, a net of 18,980. And if we sum that up, there we have that. Now, what we do in real life, of course, is post it. So I'm going to make this large, and we need to adjust that bank account number. It needs to increase by 18,980. So that's a debit. We're going to make it go up by doing the same thing, which is another debit. So I'm going to paste the debit there of 18,980. Then we're going to have a credit. Now, there's going to be two credits, really, because now you're thinking, well, what am I going to post that to? And, well, why did we get that money? Someone owed us the money. It wasn't accounts receivable, but it was a note. So there's a note here. It's an asset. People owed us that money. We're going to make it go down because people paid us. So that's a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case is a credit. They're going to paste it 1, 2, 3. And now people owed us a credit negative 19,000, even though we got 18,980 because the bank took $20 from the balance. Therefore, we're going to have to also debit, in this case, $20 to an expense, and it would be some kind of bank fee again. Here are the expenses. We do have a bank service charge here, but the book is putting it to miscellaneous. So once again, actually the book actually put it to collection expense. So we're going to put it to the collection expense here. And once again, your expenses could change based on relevance in terms of decision making. So we're going to copy that, and we're going to paste it. I'm going to paste it here, paste it 1, 2, 3. I'm going to make that the 20. Now it is a debit, and note I don't have the debit on top here. Generally, that's a general rule. It doesn't really have to be that way all the time. If you're putting stuff into Connect, then you do probably want to do that just to make sure that Connect doesn't mark you off. In real life, as long as you have it in the right column, you are correct. And so I'll fix this to put it that way, like so. Okay, so now let's go ahead and post this. I'm going to double click on cash and go to the end of it and say plus. Then I'm going to point to this 18,980 and enter. Now our cash balance matches there. Then we got the collection expense. I'm going to go down here and say equals, and we're going to point to the collection expense there and enter. And then the notes receivable should go down. So I'm going to hit here, going to hit equals, going to go to the 19. That'll bring the note down because people no longer owe us 19 of that 50 that is owed. Let's take this left click, drag it to the other side, and look at. So Severino's December 31st daily cash receipt of 9583.1 were placed in the bank's night deposit box on that date, but do not appear on the bank statement. So once again, we're going to look at our books, and we're looking at the bank statement, and we're saying, hey, I see a deposit of $9,853.10 on the bank that we put into the bank in this month, and I don't see it on the bank statement. Why? And of course, because we put it in there that night, and we recorded it when we did it, we know it should be in there as of that date, but it's a timing difference. It's not going to be on the bank statement yet. So we're not wrong. The bank is kind of wrong, but it's a timing difference. So they're not like technically, they just haven't recorded it yet. They're going to record it later. So in that case, if this is the bank balance, then they need to increase that, or we need to recognize that it's a difference of a check that's not cleared yet. So no, we're not going to panic about it. It's just not cleared yet. So we're going to say that this needs to go up by the 9583.1, and we'll call that outstanding deposit. Now, it's not outstanding because it's an incredible deposit. It's outstanding because it has not yet cleared. So, and then if we make this large, then of course now we see that this balance matches this balance matches this balance. And why is that important to us? Because we know exactly what the difference is. That means that everything that's not the difference got recorded. Because everything goes to the bank account, they're kind of doing our books for us. So if we can tie out and know exactly what the difference is, then we know that everything else was recorded correctly, at least in terms of what cleared the bank, which is our second largest check. Also note that if we're concerned about this deposit that hasn't cleared, then what are we going to do? We're going to check the bank statement after the date, because remember, what date is it that we're doing this? As of December 31st, but we're actually doing the bank reconciliation sometime in January, because we must have received the bank statement and now it's sometime in January. So we could go to the bank and say, hey, did this check clear sometime in January? And if it did, then we feel comfortable that we're okay with it. It should only take a few days for that to clear, so it should have cleared very quickly in the next month. We can check that very easily. The checks down here, on the other hand, could take longer. You know, if we paid the rent with a rent check, we're going to give it to the landlord. They're going to have to go to the bank. They're going to deposit it in their bank. Their bank's going to have to talk to our bank and get the money. That's going to take longer to clear. So if we have an outstanding check for like a month or more, that may not be completely unusual depending on who we gave the check to. And so we could quite often have outstanding checks for longer periods of time, but we can do that same process and see, did it clear in the following month? This is also very important to do, because if someone is claiming that they did not get paid, then we can go back and say, okay, I wrote the check. The second question is, did the check clear the bank? If the check cleared the bank, then, you know, someone got paid. So that's important to check.